All right. Hi, everybody. My name is Maurice McKinney. I'm a co-founder of Transition Real Estate Network. What I'm going to show you today is how to use the Redfin site. You can do this on the mobile app as well to get your mortgage payment. All right. You need to know what your mortgage payment is because one, we can qualify you for, let's say, $375,000. But if you know your goal is to keep your mortgage payment below, let's say, $3,100, you don't want to spend, your full maximum qualification. We need to work our way backward into figuring out how much property you should purchase. So we have this beautiful home in Frederick that was sent to us by one of our members, and we're going to do an estimate to see how much the mortgage payment is. Now, those of you all who are using the TREN program know that we have three programs that are very popular. Our first program is our TRENChoice program. That's our entry-level program. This is popular for buyers who want to maximize their debt-to-income ratio and qualify for as much house as possible. So let's break this TRENChoice program down if someone were to purchase a home. Now, with the TRENChoice program, your down payment is 3.5%. So when you go onto the home on the Redfin, you want to scroll down to where you see the mortgage calculator, and you want to put here that your mortgage payment, or your down payment is 3.5%. So we see 3.5% of this $350,000 home is $12,250. All right, so we got that in there. Next, we want to see what are they calculating for homeowners insurance and mortgage insurance, because the TRENChoice program does have PMI. Now, with the PMI, that number is usually 0.75. So we're going to put that in there. So this Redfin is estimating that your homeowner's insurance would be around $108. Your mortgage insurance would be $211. This property has an HOA fee of $355. That is included with your mortgage payment. All right. And the property taxes are around $39.59 for a total mortgage payment using the TRENChoice program of $3,222 per month. Okay. $3,222 a month. So if you don't want to pay this $3,222 a month, your only options are this. Either one, buy a home that does not have a $355 HOA fee. Let's just say if this home was in a neighborhood that didn't have an HOA fee, your mortgage payment would be $28,000 or $2,867. But because you have that $355, that's what's ballooning your mortgage payment to $3,222. Your other option would be to make a higher down payment. All right. So let's say that you went from 3.5% to 5% down payment. Let's see what that does for your mortgage. That gets you down to $3,185. Okay. So that is your option there for the TRENChoice program. Now, one of our other popular programs is the TRENSelect. Okay. Now, the reason why someone might choose the TRENChoice over the TRENSelect is because the TRENChoice allows you to use more your debt to income ratio. However, if you can qualify for this home with, let's just say, 40 to 45% of your debt to income ratio, then the TRENSelect program would be the best option for you. That's because the TRENSelect program does not have a down payment. So we'll zero that out. And it also does not have PMI. So we're going to take that out of there. So there you have it. With no down payment, no mortgage insurance, your mortgage payment drops to $3,092. Okay, it's about a $200 difference. So those are the two options for our programs. Now we also have the TRENSelect program. The TRENPreferred program. That program does have PMI. It does have a 3% down payment. So the mortgage payments are somewhat similar between the TRENChoice and the TRENPreferred. However, if you can qualify for this home using your TRENSelect program, that would give you the most savings. Any other option to have a lower mortgage payment will require you to lower your home price. So let's just say that you were using our TRENChoice program because you want to get approved for the maximum amount that you possibly get approved for, and you want to be at a mortgage payment of, let's say, below $2,800. Well, in that case, you probably will need to purchase around a $325,000 home because you will still have PMI. And that $325,000 home will have you at a $3,000 mortgage payment. So if you want to be at 28, it might be even a little lower. So let's just see what 310 does for us. So 310 gets you to 2895. All right. So what'll happen is our agents will consult with you, see what your goals are, and see if it's realistic. Our goal is to get you a home. Okay. So if you're telling us, if you're qualified for, let's say, this mortgage payment of $3,200, but you only want to spend $2,400, we probably can't make that happen. You're going to have to lower your purchase price. If you don't want to lower your purchase price, then you're going to have to increase your mortgage payment, your monthly mortgage payment. All right. So I hope this video was useful. Leave comments, likes below in the chat. This is on our YouTube page. So thank you for tuning in.